Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving dividends for the past 49 years. Many analysis rated this company as undervalued and just recently hiked its dividend to reward its shareholders. So if you're interested in this company, sit back, enjoy. Do me a favor and hit that like button. As always, please remember this is not financial advice. This is just me sharing. Also, if you are new to my channel, welcome. Hopefully you like this kind of content. If you do me a favor, hit that like button. Hit that notification bell too, so you don't miss out on any of the videos that I put out. Without any more delays, let's take a look at this company. So the company I'm talking about is RPM International. The ticker symbol is RPM. It is a company that manufactures, markets, and sells specialty chemicals. So if you look at their website, there's about four segments in there. You got your construction products group, and then you got your performance coating group, and then you got your consumer group, and then your specialty products groups. So it is a company that builds all these things over here. You can see now if we go to their website, it says why invest. It is a global leader in specialty coating, sealants, building materials, and related products for home and workplace to infrastructure and precious landmarks. So some of the key things is strategic balancing, profit margin expansion. They talked about the 5-pillar growth strategy, and then what I like about it is the dividend record, impressive track record. It says here that only 41 of the thousands publicly traded U.S. companies can match it. And then RPM boosts an impressive dividend track record and stock appreciation that offers superior long-term returns over the last 10 years. It has outpaced the S&P 500 by 9%. In 2021, peer groups by 11, and its 2022 peer groups by 11%. So if we go to some of the PowerPoint presentation, you can see some of the financial highlights in the record quarter 1 2023, 1.39 billion of record sales, record EBIT, and then you got your adjusted EBIT over here. So you can see some of the sales growth and the adjusted stuff, and then the record sales. If you look over here too, you can see more of the record sales from each area, all the segments. And then right here is where the region, you can see North America, you can see Latin America, Asia Pacific, Africa, Europe. So the only one that I can see that negative is this one, but everything else seems to be a positive 80% total sales. Now let's take a look at Simplisafe Dividend. Based on their dividend safety score, they're rated at 64, which is safe. This company's dividend yield is 1.85. It is a large cap, and then you can see the beta over here. Looking at the key metrics, you can see payout ratio is 39. During the recession, they have increased their dividend, and then look at the dividend growth. The last 20 years, 6%, which is average. Last 5 years, 6%, which is average. And then you got 5%, which is average. But this is the one, 49 years consecutive increases and 49 years without a reduction. If you're wondering when you're going to get paid quarterly in the months of January, April, July, and October. Annual payout would be $1.68 per share, which breaks down to about on 42 cents. If you're wanting to hop on before the date, here is it. It's on October 14, which is 6 days away at the time of this video. If you look at what Simplisafe Dividend feels, it's a reasonably valued stock, yeah. And then the average right here. The 52-week range is in the middle. The high is 101, the low is 75, so it's the time of this video is 91. And then the PE ratio is right here, 18 versus materials is 15. Here's some of the financials, the stats. You can see sales growth, total sales in billions. Return on investment capital, you can see 14% in the last 12 months. They have an 8% preference. And then return on equity is 28, and then 10% is the preference. Switching over to tip ranks, based on their analysis, they're rated as moderate buy. You got 2 buys and 2 sells. Price target is in 96, which is the average, and then your highest is 100, about 6% upside. Now, if you look over here, you can see it's a mixture of some of the analysis of buys, and there's a downside here, and then mostly it's upside. Now, if we swing to more of the stock analysis based on their SMART score, rated as a 10, which is outperform, and then look at this, insider trading and hedge fund holdings have increased. So if we go there, you can see hedge fund confidence signals positive. Hedge funds have increased their holdings of this amount in share last quarter, and then you can see based on the inside trading, it's positive, and corporate insiders bought shares worth 10 million in the last 3 months. Now, if we swing over to Nasdaq, based on 11 analysis, they rated as a buy, and then you got companies like JP Morgan, Morgan Stanley, Wells Fargo, and then their price target is in the high of 115, average of 97, and then the low of 90. Now, if we swing over again to Nasdaq, looking at the dividend history, you can see you get paid on the 7, 14, 413, 113, and 1015. So pretty much in the middle of the, between the 10 and the 14, and then you got your breakdown right here. Yeah. Now, if we swing to Yahoo Finance, you can see some of more key information. You can see a 52-week range, again in the high of 101, 74 is the low, and then you get here the earnings. You can see it's half and half, 2 misses and 2 beats. And then if you look at the revenue, you can see based on the last 4 years, it seems to be increasing from 2020 to 2022. Currently 6 billion revenue, whereas in 2021 it was also 6.7 billion, whereas 6.1 billion. And then based on their trends, you can see a bunch of holds to strong buy and buy. Now, if we swing to Yahoo Finance, based on the top institutional holdings, you can see Vanguard has about this amount, BlackRock has this, and then you got State Street Corporation, JP Morgan, Bank of America. So pretty good amount of shares, and this was reported in June 29, 2022. Switching now to Seeking Alpha, you can see what I wanted to do is look at the 10-year performance, and if you look at it, up 248%. And then looking at Webull, based on 15 analysis, they rated as a hold. You got 53% and a buy of 40%. And then their price target is similar with 115, 97 is the average, and 85 is the low. And then looking over now to bar chart, based on their price target, 111 is the high, 98 is the mean, and then 90 is the low. And their analysis is moderate buy based on 10. And then if you break it down, you only got like 1 sell, 4 strong buy, and 5 holds. And then looking at Simply Wall Street, based on their positives and negatives, you can see right here, trading at forecast 45% below estimated fair value. DEP is not well covered, dividend is not well covered, and then you got all that stuff here. If we swing over here, you can see a little bit more. If we look at the valuations, you can see like the price to earning ratio versus the industry, price to earning ratio versus fair value, and then the share price versus fair value. They feel like fair value is 167 and then currently is 91. 45% undervalued. Yeah. And then, all right. That's about it. My take on this one is a pretty good stock. I'll probably put it on my watch list. Am I going to invest on it? You know what? Not at this point, in my opinion. I feel like there's other stocks that I think that are better. But I'll definitely put this on my watch list and continue to see how is it going to perform in like the bear market that we're in right now. So definitely do your research, and also if you're interested in other companies, you want to learn about them, you want to see how their stats are, definitely go check them out. As always, please remember, stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.